Hello and welcome to this special podcast on the 23rd anniversary of Mutual Fund Insight. Joining me is the editor of the magazine, Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
Congratulations on this milestone.
Thank you. Time flies, 23 years, 275 issues. Looks like yesterday.
Right. Let's begin with what is the one sentence that you would use to explain why Mutual Fund Insight exists?
Empowering for individual investors. 23 years ago, when we started Mutual Fund Insight, individual investors had access to professional level understanding, information and insight and knowledge, which was comparable to best in the world long time ago.
Long time ago, right. So paint us the picture. Where were you when the idea of Mutual Fund Insight clicked, and what was the problem that you were determined to solve that others were not solving?
We had a hugely successful website, Value Research Online. Few lakhs of users, started using Value Research Online since our start in 1999. But it had no business model. There was no advertising. Nobody was willing to advertise. In fact, initially we had a big problem. We wanted to give some free advertising to fund companies and they were unwilling to avail it. So we had no takers. Till Google happened, we were unable to make our ends meet or, become viable. So before that, we were forced to publish this magazine because people were extremely comfortable with advertising in magazine. We were very kicked about the idea that if we are able to deliver the information in the hands of investors, and it was a remarkable thing that right now, those days also, a lot of people used to question me that, are you crazy to launch a magazine with 100 rupee price tag? Second is that I was very confident that this is so useful because this will make people's life easier. This is giving in the hands of people which they can put to work for their investments or put to work for their professional life, the mutual fund distributors. Third was that people were extremely comfortable carrying paper. And when we toyed with the idea of launching a magazine with a dummy copy, with a sample text and, a sample copy, I hired two designers and, a few editorial people to put it all together, wrote the edit, got it designed. And we went to Bombay to meet few people to gauge the market that will you be interested in advertising. And we were surprised. Everybody wanted to advertise. Everybody wanted the back cover. Those were the interesting outcome of this initiative. And ever since, it has been a great journey.
Right. We're talking about late October 2002. So in those early years, say 2002 to 2005, how did investors think about mutual funds?
When the magazine was launched, everybody thought that mutual fund means fixed income funds. Because what had happened was, Indian economies, interest rates were deregularized. They were regulated and they were freed. As a result of which, the interest rates came crumbling down from 13% to 6.5% in those 5 years. The first cover story of the magazine, Have the Good Times Gone? The Fixed Income Returns. This is when fixed income returns had given something like 13% return annualized over the past 4 or 5 years. And that is the time when equity returns were negative for 5 years. Equity funds used to go up 1 year, go down. They had gone nowhere in the last 5 years. So it was very funny. It was very unusual. The second issue of the magazine was equity without fear. Why investors should invest in equity without fear. And that turned out to be a blockbuster. This looked like, great foresight. I can now say it with great hindsight. And that really built our foundations for editorial line. And it has been a very eventful journey ever since.
Yeah. So what were the misconceptions that you kept correcting in those years?
It's not misconception. It is actually the human psychology at work. And it has been at work there. It is working even now, though there is far greater awareness. A lot of people don't have access to information and knowledge whereby they should not be misguided. But still people think that they have to buy interesting funds. They have to buy many funds. Investors are not investing. They are still collecting. They were collecting even then. Maybe today we have greater awareness. There are few more things which has come about, the proliferation of index fund or the speed at which investors are able to invest, your thinking and ability to get started, that time has come down dramatically. So, but all those misconceptions and all the drivers of greed and fear, all the short-term expectation, that still continues.
So, if you had to name three things that have changed dramatically, what would they be?
One is that people understand diversification much more. Short-term expectation, we have a large number of investors who are investing in equity for the long term. I would expect that this should have been so much more, but it is much more than what it used to be 23 years, where everybody used to talk long term, listen long term, but expected it to perform in the short run and in a fairly guaranteed way. Third is that SIP revolution, and it has a good amount to do with the awareness created by mutual fund companies and the mutual fund Sahi Hai campaign and all that. But more importantly, it is a banking system. It is a UPI. It is our ability to set up a mandate in 3 clicks. It is a fintech. So it is an ecosystem which has evolved, which is proved to be a great enabler.
What would you say is the most overhyped change in the past decade?
Overhyped change is, still the focus on opportunistic fund, alpha creating fund, or the story-led fund. There is a large product department in fund companies. And the thinking is that you have to create new product to grow your business. And by now, we have great examples where a well-performing fund, a simple mandate, delivering consistent return, and honoring its promise of what it is expected to deliver, not giving surprises, doing simple things. They have turned big. And most fund companies, or most large fund companies, they have 3-4 funds which are simple funds, which are the primary driver of their business. But still people launch a thematic fund, a sectoral fund, an idea fund, an exotic index fund, and they think that they have to invent new product to attract new investors.
Right. You often say that markets change, but behavior doesn't. So, what are the top 3 repeat mistakes that you still see?
Being a collector, buying into new ideas, getting fearful at the worst time. Once the market is at its low, you need to really invest, buy low and sell high. And people do the opposite when they come without understanding. And second is that buying questionable funds, making questionable investments at the worst of times because it's easy to do, following the herd.
Okay. Now, if I'm opening my first SIP today, what would be the starter kit that you would prescribe?
Read 5 articles on the startup section on Value Research Online, and don't read anything beyond that, and get started. Ideally, you should have started yesterday, and the next best time is right now. And the way to start is, if you are of any age below 40 years, start with an index fund. Don't look for an excuse. Look for an index fund and get started. Set up your SIP. If you are 40 years and more, start with an aggressive hybrid fund.
If you had to describe Mutual Fund Insight in 3 words and then defend each of these with concrete practice, how would you do that?
One is empowering with data. You have a scorecard which takes nearly 1/4 of the magazine, every issue, which will do a hand-holding for an investor who is willing to spend time to be guided on his own. So it's empowering. Second is an ideas magazine. Look at the first issue, Good Times Gone, because everybody was investing into debt fund to earn the 14% which they got in the past 4 or 5 years. And that was the end of it. So calling that what is driving the returns. Equity without fear. We remain an equity bull. Third is that we do a very boring job. And we do it repeatedly, reinforcing the important tenets of investing. Everybody in the financial services industry tries to ride the most recent fad that has happened. We are actually an antidote.
So, this magazine has been around for such a long time. If you had to pick one research call that you're really proud of, what would that be?
Equity Without Fear, the second magazine issue. And the market was at 2,800 levels. And in the next 5 years, it went to touch a high of 21,000. So equity without fear by any yardstick is one of the biggest bull call that we have taken, and we gave prescription. And in fact, we tried to persuade this investor. Every investor, but the equity without fear, I would like to put it on the website because I hired the finest of editors. I had written a cover story, Equity Without Fear, that why everybody should start investing in equity and allocate their long-term money into equity and choose good funds. Not many people were buying it. So I thought that how to pitch the story. So I hired an editor who was a celebrity editor in those times. And he turned the whole story into based on a cricket theme. This story has...
Would you like to name him?
Yeah, he's Arnava Sinha, and he did a classical job. And we have this cover story which has Tendulkar, Rahul Dravid, consistent part, how to build portfolio, and all the he has listed all the players in the Indian team of that time to map it to your portfolio to catch the imagination of an individual investor. And I think it remains a classic even now.
So, if the next decade belongs to AI or some other trend, what should an Indian investor do starting today?
Write some principles on a piece of paper and paste it in front of his table or wherever he will see it every day. The more things change, the more things remain the same. And I think the 5-7 things: diversification, equity for the long run, making sure that you don't have equity for the short run, not getting carried into a speculative bubble, not letting diversify but not diversify, don't spread it over 500 stocks. Make sure that you are not getting carried by any speculative speculative component in the portfolio. So frame your rules, do it well, and if you are able to manage your mood, you'll be a winner. And in fact, my sense is that AI is going to create an opportunity for all the sensible guys who will follow these rules. They will have all the principled investor, because all other people will keep forgetting the principles very often. They will think that they will have the false sense of knowledge based on shaky information.
Mm-hmm. Is there anything that will make you say we failed our readers 10 years from now?
No, I think we have done a fabulous job because Mutual Fund Insight has a phenomenal track record of driving regulatory changes. Mutual fund classification system, which is now mandated by SEBI, was carried in Mutual Fund Insights. It became an industry standard. SEBI implemented the same thing, large, mid, small, but otherwise it used to be Mutual Fund Insight. So when I look at, we have every reason to be very proud of what we are doing, and we do the boring job. We do the consistent job. We calculate percentages accurately, and we should put it out in the public domain in a very timely fashion. The only regret I will have is that given our information prowess, I would imagine that we should have been a far bigger fintech than we are.
Okay.
Getting more in the middle of their lives.
Right.
Than just being a reading vehicle.
Right. What would you like to say about the anniversary issue, the 23rd anniversary issue of Mutual Fund Insight? What's special?
This anniversary issue and most of our anniversary issues have been very special collector's item. Every issue has lot of meat, lot of stuff which you would like to keep it. I still take great pride in every issue that we have produced, but anniversary issue turns out to be special. This anniversary issue, we have two very special things. One of it is inspired by the second anniversary issue of the Mutual Fund Insight, where I checked with all the chief investment officers of every fund company which existed then, and checked with them which is your favorite movie. Mm-hmm. And the 60% of them said that their all-time favorite movie then was Sholay. So we have a themed story, investment lessons based on Sholay. But more importantly, our biggest cover story this time is 10 noisy money arguments. Mm-hmm. Everybody keeps talking. Gold, not gold, fixed income, this, that allocation, dynamic allocation. It is fixing it once and for all, and in a manner which is quite conclusive, with data, with numbers, with examples, with stories.
So let's wrap this up with a rapid fire round. I would like you to answer in one word or at a sentence at the max. The first question, index versus active. For a new investor in India, what would be the prescribed percentage?
Young investors, go for an index. Relatively older new investor who has never started, start with aggressive hybrid.
Okay.
Actively managed.
Right. Maximum number of funds that a retail investor should have.
1 to 5.
Okay.
Depending on the scale.
And portfolio review frequency?
Ideally annually. But if the market goes up and down by 20%, take an ad hoc review. But annual is good enough.
Okay. One behavioral hack that you personally use?
Don't look at my portfolio values every day.
Most misleading stat in personal finance?
Most thumb rules that you come across, 100 minus age will be should your asset allocation or this or that, or you have a number of them. Don't go for any of it. Everybody is unique. Everybody's context is different. Not all those things are made to entertain you. Worry about yourself. Think harder.
One book or idea that you give to young investors?
One Up on the Wall Street. That was the first investment storybook that I read. I still enjoy reading any chapter of it. And I would encourage most youngsters to start even now. And someday I will create an Indian version of it with Indian examples.
Okay, we look forward to that one. If you could install one habit in every mutual fund insight reader, what would that be?
Set up your recipe and forget it.
So make sure you don't miss out on this anniversary issue of Mutual Fund Insight. Grab your copy as soon as you can. Thanks for watching. Bye for now.